let's start with our conclusions up front. Canal Plus is a 3 billion, roughly today, in euros market cap global media and entertainment powerhouse that we think here offers quite a high, compelling, mispriced investment proposition across all three of our core pillars, which I was alluding to earlier in our investment framework: business, people, and particularly in price. So we'll get into each of these in detail during the presentation. So simply to give the key pointers here, so you can have a holistic view, I would say, on these before we drill on, is firstly on business. In essence, this company has transitioned from a legacy or European legacy television player into what is now a scaled global video powerhouse, which is boasting over north of 40 million subscribers, particularly after its transformational multi-choice acquisition in South Africa, which closed just over 6 months ago, so in December in 25, end of 2025. It now operates a winning, what they call a super aggregator model. And with this model, they have leading or even monopoly-like actually positions in the markets that it operates. So that's the position that we see, and then as we see it now, is also particularly an inflection point starting this year, where firstly it captures the structural high margin growth in the sub-Saharan Africa opportunity that it now has ahead of itself after the acquisition of MultiChoice. But also secondly, it also has the opportunity to maximize free cash flow generation from a rationalized European core footprint. If we move on to the people sort of summary, 2 pointers on this is when we do our investments, we define this broadly as having decision makers in our investments that are thinking and acting like owners. And this comes across in a variety of ways. But this comprehends both management and also a broader view on shareholder registry and stakeholder, essentially impacting our investment. And so in Canal Plus's case, we have a management team that has been consistently beating expectations, doing what they set out to do operationally since the spin-off took place in December 24. But then also the CEO and the senior team are buying stock in the open market with their own money, right? Which is always very telling. And similarly on the shareholder side of things, Compagnie de l'Odé, which is the Bolloré family vehicle, which is related to the Bolloré group, which is the largest shareholder, and with presence in the supervisory board, they have also been adding shares on a personal capacity. So again, there's some other points that we'll get into the people side that make this really, really compelling, but ultimately we have people thinking and acting like owners who are really aligned with us. And then lastly on price, just to give them the 2 pointers here, which is ultimately this is where it gets really interesting for us as value investors. We're valuation sensitive, and we see the stock as quite cheap. However you look at it, it's trading at roughly 4 times on 2027 EBITDA. Again, the consensus numbers are still sort of forming up still. So let's see if they turn out to be more conservative, too conservative. Then on a normalized, free cash flow yield, we're looking at a business that will be in the teens free cash flow yield over the next 2 years, midterm, as defined by management. And given this is a business that will achieve all of these with a double-digit plus EBITDA, operational income CAGR growth. And that it will double, if not more, its free cash flow generation over the coming 2 years, again, based on what has tended to be conservative management guidance. We've done our numbers, and our sum of the parts lands at roughly, somewhere in the 5 billion to 8 billion equity value, depending on your assumptions. And this compares to a current market cap of 3 billion. This is all in euros, by the way. If you look at it on a share price basis, this is actually 2.6, or in the other presentation, 2.5. If you look at the share price today, 2.6, so trading today at 2.5 pounds per share. And this compares to, so our sum of the parts comes up at these £5 per share. And you can see, depending on assumptions, how it can go up into the sevens pounds per share. So that 75, 80 plus on the lower end upside to more than 100%, more than doubling upside from these levels. We believe the Spinoff complexity, the London listing I just mentioned, how it trades in pounds as opposed to the reporting value and how everyone thinks of the value of this company, which is in euros. The shareholder overhang situation, again with Bolloré, and something we can get into, it's like there's a couple of pieces that make this clearly a company that you can answer quite quickly, why cheap question. But we believe the underlying fundamentals are not justified, and essentially the gap that we're being paid to exploit is if we have that duration in the investment thesis for things to be recognized over the next couple of years. So